time 10:28 GMT. Jay Meisler here, the daily Forex trading outlook. Typical big moves the end of last week. Cable has been the outperformer, probably ahead of data and the inflation report on Wednesday. Dollar yen is a touch higher, while the euro dollar has come off its low. I posted this last night on our GVI Forex service, and I will, rather than repeating it, I'll just show it to you and then read it. Euro dollar 137.70-ish was the breakdown level Friday, and also a minor resistance afterwards. So the level which blocks 138, although 137.80 will likely be an obstacle as well. As an aside, the high has been 137.74, so that 137.70-80 level is the one that blocks currently 138 and some levels just above it. On the downside, 137 will set the tone while within 137 to 138. But Friday's low 137.44 and the 100-day moving average at 137.38. All that remains ahead of the key 136.70 level. Typically cautious Monday start. So we held 137.70. We've come back into that range. It's been a tight range overnight, not surprising. And I think what we should do here is look at levels and what is needed to really turn this into a downtrend. If you look at the daily chart, we can point out right here 136.70 is the key level here. Stands out. It's over a 4-week low of more than the past 4 weeks. And if you can see, that's the level you need to take out here in this move to send us back into what would be a 135 to 138 range. You got the 100-day moving average, which we show at 138.44. And this is the level that the average that I am looking at. It's the 200-day moving average, and I'll show you why. Now this one seems to come in a little bit higher than what we have. We show it at probably around 136.20 or so. This one has a little bit higher. The different charting services could show different things, but I'm pretty confident in our level. Look at the way it's tracked the move up. So the slope has been pretty much along the slope of the trend. So if you're looking out and what would turn this into more of a medium-term downtrend, use the 200-day moving average. Now, if we look at the 4-hour chart and the 1-hour chart, you see the level right here, 130. Well, that's actually the right here. I'm sorry, 138.07 or so. And you look at the 1-hour chart, same 138.07. That would be a level on the upside that could be tough resistance if ever reached. 138.02 is a 23.6% retracement. 138.39 is that's a 38.2% retracement. Overall today, it looks like we're going to be in one of those range days. Markets consolidate unless it take out Friday's 137.44 low, but tries to claw its way back up. 138 figure to 50 should be tough. If you're bearish, you don't want to see it above 138.50, and I'll maintain a bearish bias as long as we're below 138.50. As I said, 136.70 remains the key level on the downside, and 138 is going to be very important going forward. And the reason it's important going forward is because if it comes resistance, the new range is 135 to 138. If it holds, people will say 137 to 140 is still in play. Otherwise, we'll be in a data watching mode for the rest of this month, especially as far as ECB inflation, which comes out at the end of the month. Watch for speakers. We already saw some German reports today that Draghi might not have been speaking for the consensus, but they didn't really decide on a rate cut in June. And add to that Ukraine, and I read something last week that the German economy stands to suffer the most if sanctions are stepped up. So that hasn't been a factor, still could be a factor. It's a reluctant factor. And that's where we stand for coming into today, which looks like one of those consolidation sessions, unless 137.78 is taken out in the upside, or 137, let's say 35.45 on the downside. Now, one thing I put links in every, almost every day to different articles that I've written, which I think are really useful. This one, Avoid Dumb Trades and Dumb Stops, is one of my favorite. And if you're a trader of any level of experience, you really should read it. It could make a difference in your trading. It made a difference in mine, and I wrote it. So, from years of experience, Dumb Trades and Dumb Stops. A great title, but it's also a great article. The link is embedded here. Just click on it and read on. Okay, good luck and good trading.